Good evening, I'm Shraddha Babla and you're watching Bloomberg Quint Live. The equity markets both lost upwards of 0.4% and the broader markets lost a lot more on profit booking. So what did you miss? Let's go straight to the headlines. The Indian markets start the new week on a lackluster note. Both the Nifty and the Sensex end with nearly 1% loss. The US pharma watchdog decides to pay a surprise visit at one of Sun Pharma's plants in India. While Idea Cellular announces the sale of its tower arm to American tower company for 4,000 crores, the company also reports a wider loss for the second quarter. And it's a tepid listing for New India Assurance, the country's largest general insurer, debuts at a discount on the bourses. All right, Indian Prime Minister Narendra Modi and US President Donald Trump hold bilateral ties on the sides of an ASEAN summit in Manila, strengthening bilateral ties and addressing security concerns in Asia-Pacific region dominate the proceedings. All right, straight on to a quick check of the market action. The new week, a tepid start. That's how the Dalal Street action can be summed up in a sentence. Indian markets incurred losses in trade today. The Nifty and the Sensex both lost nearly 1%. Broader markets also ended in the red. Adani Ports, Aurobindo Pharma and Bharti Airtel were amongst the top losers. Neeraj Shah joins us now. Neeraj, a lackluster day in trade today.
Yeah, very weak day of trade, and it weakened towards the second half. That was the worrying part. And this happened despite the global markets not looking all that bad. So let's see if it's indeed our own fiscal concerns, which the bond markets have been pricing in, are impacting our equity markets, maybe. So about 1% apiece for the Nifty and the Sensex, and the broader markets too fell. The Nifty Bank maybe not so much, and the Nifty Mid Cap maybe not so much, but all of them fell in the session today. The top losers included Adani Ports, Aurobindo Pharma, Bharti Infratel had a bit of a cut as well in the session today. In fact, it cracked in the second half of trade, so 2.5% apiece for that. ONGC and BPCL were amongst the other stocks that came off quite heavily. What was bucking the trend? Well, maybe in a small way was IT. TCS was the best performing stock, but HCL Tech ever so marginally. Mahindra and Mahindra marginally at that. So select IT names did well, and it was showing in the mid-cap end of the market for IT as well. So Nucleus Software, Vakrangi Software, there are a couple of other smaller names as well, the likes of 8K Miles, which was up 10%. Just Dial was up about 7% in trade. So IT and IT-related companies did rather well for themselves. There was no impact that we saw from amongst the top beneficiaries of the GST rate cut. So GSK Consumer, a consensus amongst brokerages, didn't do too well. Flattish. Titan, which the management told us, which the GST cut was a fairly positive move, didn't really react too much in the session either. So not the best of days for them, and a really terrible day for the ADAG group companies. You know, Reliance Communication down 13%, Reliance Capital down 4.5%, Reliance Naval hitting fresh 52-week lows. So it was a forgettable day for the ADAG group companies. Last but not the least, a forgettable day for the new listing as well, ending the day 9% lower. That's not how you want to start your journey on the stock exchanges. Back to you.
Thank you for that quick wrap, Neeraj. The broader market breadth was also discouraging, with just a single gainer for every two losers. But onto a Bloomberg Quint exclusive now. The US pharma watchdog has decided to pay a surprise visit at Sun Pharma's Bhaskar plant. Yatin Mota joins in with the details. Yatin, how important is this plant, and what does the drug maker manufacture there?
Bhaskar unit is under the US FDA lens. Now, sources are indicating that this is a surprise inspection which has been conducted by the US FDA, and clearly this is something which is quite important for Sun Pharma, because we have the company which has been able to come out of the woods, especially for the Dadra unit, wherein they got the EIR, and probably if the inspection goes successful at the Bhaskar unit, probably the troubles for Sun Pharma will narrow, because Bhaskar unit is an important injectable plant in which they have a couple of products and filings for the US markets, and probably if they get the EIR, they will be able to export various products, new products from this particular unit. It's surprising and interesting part is that the Bhaskar unit is at a very close proximity to the Halol unit, which is one of the largest unit for Sun Pharmaceuticals. So very interesting to watch ahead of the earnings, as to inspection going on. Of course, the analysts will be quite curious, to ask the management really as as to what exactly is happening as far as this unit is concerned, and when will the US FDA really reinspect their halol unit. So along with the earnings tomorrow, we'll have Sun Pharmaceuticals in focus, wherein the analysts will be asking on the inspection here as well as the updates on halol. So we'll be closely monitoring as far as the developments at Sun Pharma and the Basca unit is concerned.
All right, thank you so much for that, Yatin. But now shifting focus to telecom, Idea Cellular and Vodafone India have decided to sell their individual tower businesses to American Tower Company for $1.2 billion. The agreement is expected to be completed in the first half of 2018. What's interesting is that Idea will get a higher value than Vodafone despite having a lesser number of towers. To explain the deal contours, we're being joined by Samit Sarkar. Samit, what's the rationale behind these valuations?
So the reason why Idea will be getting more money compared to Vodafone is because their tenancy ratio of Idea is around 1.8 times, while that of Vodafone is just 1.5 times. Now Idea will be selling its 10,000 towers with total tenants of around 17,914, while Vodafone will be selling around 10,235 towers with total tenants of 15,557 on its towers. Now Idea will be getting around 4,000 crore rupees, while Vodafone India will get around 3,850 crore rupees out of this deal, and the entire proceeds of this deal will be used to bring down the debt of the merged entity. So what will ATC get? ATC will add in a market share of close to 6 to 8% post this deal. Currently ATC holds around 13% market share in the tower industry, and they'll add around 6 to 8% from acquisition of this towers. Along with this, ATC will also add around 2,100 crore rupees to its top line in the first full operational year from this towers, with a gross margin of around 800 crore rupees, and the other expenses will be close to 100 crore rupees, which add up to an EBITDA of around 700 crore rupees, which means an EBITDA margin of around 33.3% for ATC from this towers.
All right, thank you for getting us all those details, Samit. In fact, Idea Cellular also reported its second quarter results today, after which the share price dropped to its 3-week low. The telecom operator suffered a wider than anticipated loss due to lower revenue and increased level of competition. Net losses rose to 1,106 crores, while revenues fell about 8.6% on a quarterly basis to 7,465 crores. Margins contracted 280 basis points to 20.1% during the quarter. Sticking with quarterly earnings, state-owned power generation company NTPC reported a lackluster set of numbers in the second quarter. Net profit fell, missing analyst estimates, even as other income increased on a yearly basis. Net profit declined 2.3% to 2,439 crores. Jayesh Khilnani joins us now. Jayesh, how do you look at NTPC's Q2 performance? Could you please break down the numbers for us?
The largely inline numbers coming in for NTPC, slightly lower than what we were anticipating. Revenue was up about 1.6% at 19,699 crores, while we were anticipating 20,261 crores. As far as the operational performance is concerned, EBITDA was up marginally at 0.8% at about 5,440 crores, and EBITDA margin also came in at about 27.6% as compared to 27.8% during the comparable quarter last year. Now net profit is where actually we saw the dent coming in, which was down 2.3% at 2,439 crores versus 2,497 crores. Now looking at the internals of the numbers, gross generation volume was up 7.4% at 65 billion units, that is, and commercial generation volume was up 6.7% at 64.64 billion units. The coal-based PLF came in at about 76.61 versus 74.65%. That was a marginal uptick coming in over there, and the coal-based plant availability factor, that too that came in about 86.14% versus 89.75. As far as the other segments are concerned, the gas-based PLF that came in at about 25.59%, solar-based PLF came in at about 14.05%, and hydro-based PLF came in at about 89.35%. Lastly, we saw that the average tariff fell a bit to about 3.21 kilowatt hour versus 3.25 kilowatt hour that we saw during the last comparable quarter last year. So all in all, in line to slightly lower than what we were expecting.
All right, thank you for those details, Jayesh. The stock did manage to end with marginal gains, but Adani Ports topped estimates in its second quarter earnings report. Net profit fell 7.5% to come in at 992 crores, largely due to a higher tax incidence of 710 crores in the first half of the fiscal. The revenue, however, managed to beat estimates, coming in at 2710 crores. The company's board has also approved raising up to 3,000 crores by selling debentures, and it also gave a go-ahead to a rupees 500 debenture buyback. Capital goods major L&T lowered its order inflow guidance as its existing projects are running behind schedule and the private investment cycle is yet to pick up. Speaking to Bloomberg Quint, R. Shankaraman, the whole-time director and CFO of L&T, says that no projects have been cancelled. The coming year will but remain tricky as many states head into polls, leaving uncertainty in policy making. Listen in.
Next year is going to be a bit of a tricky year in the sense that in 19 the country is going onto the polls. So a lot of decisions which could involve multi-political consensus could get delayed. So typically, no decision mode starts 2-3 months prior to the elections, and that's been our observation. So all that needs to happen in FY 18-19 need to be well in place by December 18, January 19. We can't leave it to the slog overs really for the next year. So it's very important that the next year starts strong and the first half turns more robust than what historically it has been.
All right, but we also saw some interesting moves in the bond markets. In fact, Reliance Communications' grace period to pay interest on its dollar-denominated bonds ended today, and with the telecom operator already failing to honor its interest payment back home in India, all of this has taken a toll on the company's stock and bond prices. Dennis Wee of Bloomberg Quint sums up the sticky situation that the dollar bondholders find themselves in this report.
Holders, they're always hoping they would get paid, but in this case, as you mentioned, the company has said that they're in a standstill arrangement with the lenders, so the general expectation is that they won't pay, although we won't really know until, I guess, the end of today. And if they don't pay, then I guess there's plenty of stake for bondholders because there's a big group of creditors that are surrounding Reliance Communications. They've got operational creditors like Ericsson, they're in discussions with lenders, proposing to convert debt to equity. They've also got onshore rupee bondholders. As we know, over the weekend, they mentioned they've missed payment on these rupee bonds, and they won't be making payment. That's all part of the whole, standstill arrangement. So I think there's plenty, at stake for bondholders. It should be in their interest to get organized, I think, because there's so many other players that are jostling for, a piece of Reliance. And, you've got estimates from Nomura saying that recovery prospects could be anywhere between 0 to 35 cents on the dollar. So I think, I think it'll be interesting to watch what happens next.
All right, and while Reliance Communications dollar bonds slid to record lows today, Bill Barney, the co-CEO of Reliance Communications and CEO of Global Cloud Exchange, a unit of Arcom, is confident that the bond repayment issue would be sorted out soon. This was in a conversation with Bloomberg's Haslinda Amin on the sidelines of the APEC CEO Summit in Vietnam.
I do see a restructuring that will be coming through in the parent company as we exit the wireless business and we move to purely a B2B business. So there will be a change for us as a company, but we're pretty well along with our lenders, and we think that transition is in a matter of weeks away. So I think we're very excited about the next few months.
So having said that, you don't see any necessity at any point in time for GCX to borrow on behalf of the parent company to help pay debt?
Absolutely not. In fact, we're throwing out enough cash that we're actually funding this new cable from our cash flow. So we actually have got a very strong cash position. We continue to accrete cash as a company. And, good or bad, that company is a standalone. It actually cannot refund cash flow to the parent company. So it actually has to stay as a standalone entity per the bonds that we actually issued 3 years ago.
The country's largest general insurance firm, New India Assurance Company, debuted at a discount on the bourses today. Saloni Dhanuka is standing by with valuation math post the listing. Saloni, how does the company stack up against its peers now?
So, well, New India Assurance, the state-run general insurer, made a tepid stock market debut today as the stock got listed at 748 rupees, which is a discount over 6% as compared to its issue price of 800 rupees. Now, in terms of business, it is the largest general insurance company in India in terms of gross domestic premium income, net worth, profit after tax, as well as distribution network for the year ended 2017. Now, given the listing price of 748 rupees, it will demand a market capitalization of over 62,000 crore. Now, in terms of financials, the gross premium book has seen a compounded annual growth rate of over 15% in past 4 years, while the investment income and the net worth has seen a CAGR of 13% and 7% respectively during the same period. Now, talking about the key operating parameters, the company has the lowest operating expense ratio of 20.4% as compared to its peers, while the claims incurred as a percentage of net premium stood around 92.2% for the year ended 2017. And do remember that the company has been yielding returns of over 15% for the past 5 years, and it stood over 15.4% for the year ended March 2017. And the solvency ratio stood at 2.2 times as compared to IRDA mandate of 1.5 times. Now, when compared to its unlisted peers, New India Assurance has the largest market share of over 15% with highest gross domestic premium of 19,000 crore rupees, and again it has the highest solvency ratio of 2.2 times, which is highest against its unlisted peers. Now, when you compare New India Assurance with its listed peer, which is ICICI Lombard, the issue looks a little bit expensive as compared to ICICI Lombard. For New India Assurance, the price to earning multiple is 70 times as compared to 49 times for Lombard, while on the flip side, the price to book stood around 4.9 times as compared to 8.3 times for ICICI Lombard.
All right, thank you for that, Saloni. Moving on, Bharat's 22 exchange traded fund is all set to open for public subscription on November 15th. Nimesh Shah, the managing director and CEO of ICICI Prudential AMC, tells Bloomberg Quint that government's policies will attract more investors to the fund. He also believes that Bharat 22 offers better value than Sensex. Let's listen in.
The way we have gone about creating the index, the way government focus was, government could have easily raised the money by placing it with institutional investors or foreign investors. The equity would have been lapped up. But the government was very clear that they wanted to ensure that the common man of India benefits out of this. They believe the government believes that with the rise of India and with the way India is going about and the way they are going about creating their machinery, these companies will benefit out of whatever they are doing, like the infrastructure push that they are giving or the capital investment that the government is doing. Prominent engineering companies of the government or the private sector will benefit out of it. So the companies have been selected very carefully. If you see the way the index has been created, we had a host of companies through which we had to filter and select these companies. These 22 companies we have been selected in a way that we are happy with each of the companies that we have done. Government had prepared a checklist as to what is the price to book ratio, is it available at what is the PE ratio, what are the future potential of the company, what is the dividend yield in the company. So there was a whole set of checklists. Only if a company ticks all the check boxes, then it was getting, then it could have come into the index. So a very rigorous way of selecting the index is concerned. Government has also put in a discount of around 3%. To sweeten the deal for the retail investor. There are two things in Bharat 22. First of all, we have, in addition to the government companies, we also have the private sector investment that the government had. Like 3 of the companies where government held in the shares are there in this particular index, whether it is Axis Bank, whether it is Larsen & Toubro, or whether it is ITC. So these 3 companies are there. That is different from the earlier one. Second thing is that there is a rebalancing that will be done. Suppose we have put sector limit and stock limits. So if the stock limit is 15% and the sector limit is 20%, if by March of this year, if every March we'll see the portfolio, if the stock limit has gone up, then we'll rebalance it and bring it down to 15%. So to a certain extent, some amount of profit booking will happen regularly in this. So there is a whole comparison of 1 year, 3 year, 5 years and 10 years of Bharat 22 and Sensex, and Bharat 22 has consistently over all this has done better than the Sensex.
All right, on to the big development that took place on Friday. The GST Council cut tax rates on more than 200 items, all of which are considered to be mass consumption products. So which are the companies that stand to gain the most from this rejig? Agam Vakil is standing by with that list.
So thanks for that. So let's start off with the FMCG products. Now what we see is that in terms of FMCG, starting off right at the top, we have the likes of HUL, which actually ticks all the boxes, and a lot of them. So they have it in shampoo and deodorants, for that matter detergents as well. You have likes of HUL as well as Jyoti Labs. In instant coffee too, we have seen these GST rates come off from 28% to 18%. So you have beneficiaries like Nestle and HUL, and of course chocolates and chewing gum, where you have the likes of ITC, HUL and GSK Consumer. But moving in and continuing with the FMCG trend, we also have the likes of the Gillette and HUL, once again benefiting in the shavings and razor blades category. In the relatively more discretionary space, watches, so you have likes of Titan and Timex, and in luggages like VIP and Safari, along with footwear of course also will be in focus, where Bata, Relaxo, Liberty along with Mirza International, which stand to benefit in terms of these cut in GST. Now moving on to the more discretionary space in the consumer durables area, we have the likes of Crompton Consumer, Havells, Bajaj Electrical for that matter, in switches and cables and wires as well. Once again Havells stands out, Everready Industries in primary batteries, and well, even engineering companies like L&T and BEM are coming when it comes to the earth mover space. Moving on to building products, once again we have the likes of Kajaria Ceramics, Soromani Ceramics, as well as Century Ply and Green Ply standing out in case of these categories. Once again, still looking at a 10 percentage point cut, coming down to 18%. Moving in terms of some other categories that we are keeping an eye on, of course, we also have condensed milk. So we have beneficiaries in Nestle and Parag Milk Foods, refined sugar as well, seeing some amount of benefits coming in. And along with that, well, past and diabetic food. So Nestle and ITC once again figure in that list. Finally, there are some other aspects and some other rates where we have seen a cut. So in spectacle frames, rates cut from 18 to 12%. And in terms of aircraft engines, so we are looking at aviation companies standing to benefit there, with the rates being cut from 28% to as much as 5%. And a big benefit coming in for restaurants as well, where the cut has taken place from 18 to 5%. Again, we've seen specialty restaurants move up by as much as nearly 5% in today's day of trade. And Jubilant Foodworks, along with Westside Development, among the others, which stand to benefit from these GST cuts.
All right, thank you for all those details, Agam. Delhi government today moved the National Green Tribunal seeking an amendment to its order on the 11th of November on the odd-even formula in the capital. The NGT will hear the plea tomorrow. The NGT had on Saturday said that the odd-even scheme should be implemented without any exceptions. The Delhi government had planned to exempt two-wheelers and women from the rotation scheme. After the NGT ruling, the Arvind Kejriwal government had decided to scrap its plan to impose the rule. Meanwhile, the Supreme Court today heard a fresh PIL seeking to curb rising pollution in Delhi and the National Capital Region. The plea, filed by lawyer R.K. Kapoor, stated that stubble burning in Delhi's neighbouring states like Haryana and Punjab had led to an alarming rise in pollution levels in NCR and its adjoining areas. The Supreme Court has issued a notice to the centre and states concerned, seeking their reply on the issue of dust pollution and stubble burning. Bitcoin, however, has plunged 29% from record highs after the cancellation of a technology upgrade, prompting some of the users to switch out of the cryptocurrency Bitcoin Cash. Now, a rival that split from the original Bitcoin in August, that has jumped 32% since Friday, according to CoinMarketCap.com. Now, the resulting volatility has been extremely even by Bitcoin's wild standards. Now, Bitcoin's 29% slide has spooked the speculators who had profited from a 500% surge this year. Bitcoin's slump has dragged down shares of cryptocurrency-related companies, but there were few signs of wider ripple effects. Prime Minister Narendra Modi and US President Donald Trump held bilateral talks on the sidelines of the ASEAN summit in Philippines today. The meeting comes just weeks before Donald Trump's daughter Ivanka Trump visits India for the Global Entrepreneurs HIP Summit. Strengthening trade and diplomatic ties and security in the Asian region were some of the topics that were possibly discussed during the meet.
एशिया के भविष्य के लिए मिलकर के काम कर सकते हैं, विश्व में मानव जात के लिए हम क्या भला के काम कर सकते हैं, ऐसे अनेक विषयों पर हम मिलकर के चल रहे हैं। राष्ट्रपति ट्रंप जहां भी गए हैं पिछले दिनों और जहां भी उनको भारत के संबंध में कहने का अवसर मिला है, उन्होंने भारत के संबंध में बहुत ही ऊंचा अभिप्राय व्यक्त किया है, बहुत ही आशास्पद भाव व्यक्त किया है और मैं भी विश्वास दिलाता हूं कि भारत की विश्व को जो अपेक्षाएं हैं, अमेरिका की जो अपेक्षाएं हैं, भारत उसको खरा उतरने में भरपूर प्रयास करता रहा है और करता रहेगा।
Prime Minister Modi here. We've had him at the White House and he's become a friend of ours and great gentleman doing a fantastic job in bringing around lots of factions in India, bringing them all together. That's what I hear, and that's good news. And it really is. It's a lot of good reports coming out of India, so I want to congratulate you. But it's an honor to be with you. We're rounding the turn for our last couple of stops. I have a couple of more today, and then tomorrow we have the conference, and then we leave at about 3 o'clock. And it's been a great 12 days.
The global economy is picking up gradually to pre-financial crisis levels. That's the word coming in from the Managing Director of International Monetary Fund, Christine Lagarde. Speaking to Haslinda Amin of Bloomberg on the sidelines of the Asia-Pacific Ministers meeting, Lagarde said that Asia will lead the global growth rally. Here's the slice of that conversation.
The global economy is recovering. We're moving from 3.2 last year to 3.6 this year, 3.7 next year, catching up with pre-financial crisis average growth. This region, Asia, is going to continue to be the big global growth engine that it has been. And compared with this average of 3.6, Asia will be generating at least 5.5%. So that tells you a lot about the role played by the region in global economic development.
Do you see evidence of inflation in this part of the world?
There is. It's a balanced situation. You have countries that are currently at relatively low inflation levels, and where we believe that monetary policy must continue to support recovery and have an impact on price levels. But there are countries where inflation is still at quite sensible and good levels.
Having said that, do you see several banks in Asia tightening in 2018?
Monetary policy will be tightened in those countries where the economy is picking up sufficiently fast and where inflation is rising. So this is going to be the case in the US. It's happening very gradually, very smoothly, and we hope that it continues at that pace without any abruptness, without massive capital movement as a result. The UK has just recently raised interest rates again, but in this part of the world, I'm not sure that I'm seeing it right away.
We saw a Big Bang moment for China yesterday when it opened up further its financial sector. Mm-hmm. Is it more significant or is it more symbolic?
I was telling you earlier that services have to be better integrated and more open to trade and to exchanges. That's one indication. Financial services in China were fairly constrained, restricted, with quite a lot of barriers to foreign direct investment. The fact that it is considering to remove at least partially those barriers and to move above the threshold of 50% and then gradually to eliminate those thresholds, that's an indication of two things: openness and also better strength and confidence.
A 7.3 magnitude earthquake occurred along the Iraq-Iran border on Sunday local time. The tremors were felt in the Erbil in northern Iraq to as far as Iraq's capital Baghdad in the south. Now, people reported buildings swaying from the tremors in Iraq. The death toll has reached 330 in both these countries so far. But with that, it's a wrap on this edition of What Did You Miss? Thanks for watching and stay tuned in to BloombergQuint.com.